All right, we got another fun tax topic today. This one is for married couples who file a joint tax return and get a refund check from the federal government. And they want to know what share of that refund check goes to spouse number one and what share of that refund check goes to spouse number two. Some married couples, like myself, we combine our finances. We put all the money in the same pot and it doesn't matter. But another equally valid way to do your finances as a married couple is to keep your own separate bank accounts and manage your finances separately. This is quite a common way to do it, but when you get one refund check from the government, how do you know how you should split it? Do you just split it evenly? That's what we're going to discuss in this video, and I'll share an easy way to calculate what's a fair way to split your refund check. So what I have on the screen here depicts this couple's joint tax return. From the point of the government, these two are a single unit. They made a combined $60,000 this year. They owe a total of $4,000 in taxes. And they had $4,700 withheld from their paychecks to pay those taxes. Since they had more money withheld than they owed, they get a single joint refund check of $700. But our two partners don't operate their finances in a single bucket. They operate it as two different people. So I've split their income into two buckets, one representing person one and another representing person two. So although their total gross income is $60,000, person one earned only $25,000, person two earned $35,000. Now, although they still owe $4,000 in taxes together, the amount that they had withheld from their paychecks might be different. And that's what I'm reflecting here. The sum of this overage is $700, but we need to find out how to assign the right amount of the refund check to person one and person two. Now, what my method treats as fair is having person one pay the same percentage of their total income in taxes as person two. And to me, that seems fair. Both me and my wife, we would want to have the same percentage of our income going to taxes. But this isn't exactly how it would work if you were two separate people. If you were two separate individuals, unmarried, filing separate tax returns, one who made $25,000 and one who made $35,000, person one is going to actually owe even lower percentage of their taxes because in America we have a progressive tax rate. The more money you make, not only the more taxes you pay, but the higher percentage of your income you pay. But I think splitting your refund as if each individual pays an equal percentage of their income towards taxes is a good, fair way to do it. So here's the three simple steps you need to do. First, you need to calculate what is that joint effective tax rate. What percentage of your total income is the tax you owe? So what you need to do is go find the tax return you filed for that year and find your total joint gross income, which is on line 7B, and the total taxes you owe together for the year, which is on line 16. So I've got a mock Form 1040 tax return here. And if you use TurboTax or something, you should definitely save a PDF of your actual tax return. So first what you want to do is scroll down to the second page, find line 16, which is the total tax you owe for the year, $4,000, and divide that by line 7B, which is your total income for the year. So we have that here, $4,000 divided by $60,000 is 6.7%. That's the effective tax rate that you as a joint couple paid. That's the percentage of your total income that you paid in taxes. So now you want to calculate each individual's share of that total $4,000. So we have to find each individual's gross income, which you get from box 1 on your W-2 forms. So this is your W-2 you should get from your employer. Take box 1 for person 1 and box 1 for person 2. Now don't forget, if you've had two jobs, you have to add up the value from box 1 for multiple W-2s. So we'll put those numbers here. Let's say person one made $25,000 and person two made $35,000. And we multiply each individual's gross income by that number we calculated, your effective tax rate, to get each person's share. So person one, who earned $25,000, their share of the total tax bill is $1,667. Person two, who made $35,000 times 6.7%, is $2,333. So this is what each individual's contribution to the total tax bill is. But that's not what they actually paid. You need to go find how much they actually had paid, how much they had withheld from their checks. That's this bar here. So that means we go back to our W-2s from our employers and look in box 2. Box 2 is right here, federal income tax withheld. So let's suppose person 1 had $1,800 withheld and person 2 had $2,910 withheld. Now you can take the difference of each to find each person's share of the $700 refund. 1,800 minus 1,667 is $123. 2,910 minus 2,333 is $577. So now we see when you get that $700 check from the government, $577 should go to person 2, $123 should go to person 1. This method should work for most conditions. One thing you'll find interesting that can happen is sometimes you might have one person over withhold and one person might under withhold. So let's take our same couple. They get a joint refund of $300, but when you calculate it out, person 1 might have had over withheld $500, while person 2 actually didn't withhold enough. So when you get that $300 check, person 1 should keep it all, and person 2 should go and take $200 and give it to person 1 if you really want it to be fair. But this method will help you calculate that. A couple weaknesses with this method. First of all, it doesn't consider whether certain deductions belong to one spouse or the other. So if one spouse is paying tuition, or one spouse has student loan interest, or one spouse contributes to their IRA, it's totally up to you whether you want to consider the tax benefit of those deductions as something you share jointly, or whether you want to consider all that benefit to apply to the person with the student loans or the person who contributes to their IRA. And you'll have to make some adjustments to this method. It doesn't consider self-employment income, so if you have 1099s or had to pay self-employment tax, this method won't be quite as simple. And as I said earlier, it doesn't account for the progressive tax rate. This whole point of this method is to get each person to pay an equal percentage of their income towards the joint tax bill. But I hope this is helpful. If you're one of those couples that keeps separate finances, hopefully it reduces some arguments that might come around at tax time and makes it easy for you to split your tax refund.